Hello, everyone. Welcome to another Webinar Wednesday by Smartkarma. I'm Michael Tegos. Today, I have the pleasure of welcoming to the webinar insight provider Pyari Menon, who will share his stock ideas based on data mined from technical publications such as patents and research papers. For 20 years of experience in the industry, both the buy side and sell side at places like Goldman Sachs, Credit-Suisse, and more. His coverage has been in technology and mid-caps across various geographies, including Taiwan, ASEAN, India, the US, and Europe. I will let Pyari share more about his process in a second. First, just some very quick housekeeping. Please do not reshare or reproduce the contents of this webinar without express permission. Our recording will be available at the registration page afterwards, as always. If you have any questions for our speaker today, feel free to use the Q&A button on your Zoom app. We will try to get to them at the end of the presentation. With that out of the way, Pyari, let me welcome you formally to the webinar. Thank you very much for being with us. The floor is yours.
Hey, thanks, Michael. So this is the first time I'm presenting something on Smartkarma, and it's pretty much giving. I'd really like some kind of feedback, partly because this is still kind of somewhat work in progress. If anybody has any ideas, either you can share it with Smartkarma, who then sends it to me. The whole idea is to see how this can actually become a better product as well. Firstly is, I think, a lot of what we as investors do is pretty data driven. And, but end of the day, I think a lot of the standard data that we have historically used is available quite commonly with most investors. And, investors are always looking for an edge, and they're looking for different types of data, and that is less commonly used data to get that edge. In fact, in some ways, the reason I use the word data mining as well is because it is data mining, but at the same time, it's kind of a catchphrase today to grab attention as well. So what I first thought is, since a lot of data mining is already being done, I thought I'd just run through, what is it that I do, which is slightly different from what a lot of the other data providers do, or just in terms of how it can be used very differently. So this is basically, I just thought that I will divide it into 4 subsections as to, how it is kind of slightly different from what others do. Firstly is, the capturing of the data, which is finally used, is not that easy, but the data is very easily available as far as I'm concerned for the data that I use. But in some of the other big data methods, the data availability itself is difficult. And the capture is even more difficult in the sense that they have to use satellite images. Some of them use credit cards data. Some of them even use drones. Social media is another one. But in this case, the only data source that I used are published documents, which frankly is quite easily available. And in many cases, though the data, extracting the data is a little bit involved, the data is very easily available. And the bulk of the data which I'm using is actually coming from patent databases, which are, in many cases, there are many sources, and they're pretty publicly available data sources. And the reason that patents is the overwhelming kind of data set that I use is because in some of the technical papers, though we do use it, we don't get company names. It is only the names of the person who wrote the report. So then it gives one more layer in the sense that you have to go and search, where does this person work and when did he work with that, which kind of starts to get very involved. But end of the day, the patent database itself is very, very large. It goes into hundreds of millions of documents overall. So we have a large enough data set to play around with. Now, I think the type of data is also slightly different from what some of the other data providers use, in the sense that there is a quantitative aspect to it. But we do use some qualitative aspect to finally come to kind of give numbers to the criteria we're looking at. Other data sets also use, when we are looking at sentiment indicators or looking at imageries, there is a certain amount of subjective and qualitative element to it. But a lot of that is, I think, driven by just pure quantum kind of numbers. Data quality, I think the one big difference is that a lot of the data which a lot of other all data providers provide is very unstructured, tougher to get. This is actually quite curated, and to be honest with you, what we are extracting from is as good as a P&L or an earnings announcement which companies make. The only issue is how do you get into it and pull out, what are the details that you need. But the quality of what is being, the documents from which is being extracted is generally of a very high quality. Now, finally, I think, what is the end goal? End of the day, all this is fine, but what are you trying to achieve is really what the bottom line is. And, I think in any case, I think, both are trying to get some kind of an edge. But this particular insights coming from technical publications, I think one big difference is it is primarily a long-term focus thing. A lot of the, I think, the issue is really like, what is happening, the innovation that have happened is correct, but there is an element of execution risk down the line as to whether the companies can actually make use of these innovations and execute fully to benefit. But a lot of the other all data which is used, actually the execution has already happened. It is just that it has not been reported, and people are just trying to kind of see patterns, correlations, and then kind of try to extract information from that for short-term trading reasons very often. And the last point is between who can use it is, I think, very culturally, if I were to look at it, what I'm doing here in, extracting data mining technical publications would possibly fit better with traditional funds and traditional hedge funds, which have slight, and not just trading in terms of systematic trading where they see some patterns, they go for it. So I think that is the primary difference between what I'm trying to do here and which a lot of all data, other all data providers provide. There will be insights in that, but there is much more short-term oriented. And I think just in terms of quality of data, that is which I'm using, the raw thing is actually, very well, is quite pristine. So I just thought that, this is something to see whether it worked, the thing can work at all. I just thought I'll use a proof of concept. And frankly, I really have not kind of back tested it to see whether or retrofitted to pick two stocks. The reason I picked was actually, it was pretty random. The reason I did is, firstly, I picked tech because I generally thought that is where the maximum impact could be seen, because, innovations make a big difference. The second reason I did is because both Largan and Genius are, have got only simple businesses. They're only into one business. So a comparison is not corrupted with innovations in some other area. So that was the other reason that I picked this. And they basically just make, camera modules and sell to cell phones and other things. And so that is, and, that is the reason I picked these two. And there has really been no retrofitting. But one of the things which stands out, if you look, is, about 2 to 3 years after Largan started to really out-innovate Genius, the stock had spectacular outperformance. It took a while for the market to know it, but after that, they started to execute and deliver as well. That's a different thing. But, someone could have had a look at this and given a high probability that even if half of what innovations they were exceeding Genius was, they were doing, that the stock is very likely to outperform over time. Genius did catch up, and which is why you will see that I think you see, the outperformance is kind of narrowed. Even now, I think the Largan clearly has much higher levels of innovation. So it is likely that over the longer term, they will continue to outperform. But Genius did catch up when both Largan's innovations started to slow down a little bit, and Genius started to have higher innovations. And there were certain areas in which I think they were able to almost be as good as Largan in some of the areas, particularly something called the F number in lenses. So I think basically bottom line, what this tells you is that end of the day, if companies have to come up with competitive advantage, which allows them high margins, better returns, and long-term share price performance, innovation is absolutely critical. I think that is basically what drives, long-term competitive advantage for companies. So so the next 3 slides, actually there are 3 slides on this. I just thought I will give an idea of what happens when we run the algorithm. And this is actually, I've not published this. This was done as a bespoke work for somebody who wanted to have some insight into the area of dentistry. They were looking for something quite specific and all that, but having run it, I just thought that, and it was run recently, I just thought that I will kind of tell what happens when we run it. So, when we run this, obviously keywords and all those kind of things are used, but what the algorithm does is basically it crawls through all the kind of patent databases that we have asked, looking for this specific kind of industry. In this case, we actually looked at the dentistry industry, and then it just pulls down all the names of the companies which are there, and it then populates the different criteria that we use to kind of assess whether they've got some kind of an advantage. It basically counts various things and gives you those numbers. So it assesses for various criteria and it ranks them. Now, there are about 160 companies in these 3 slides. And that is just the companies which starts with the alphabet A. So that's all. So you have actually just in the area of dentistry about 2,500 companies which basically operate in this. And it'll pretty much capture most of them. So long as the company has published or written something about what they do in the area of dentistry, we are able to capture those things. And we are able to also kind of look how often these things have been mentioned, who has mentioned it, and those kind of stuff, and figure out, whether the innovations will be impactful or not, and thereby kind of start to rank them for various criteria. And actually, just to give you, 2 of the big names in this, basically Dentsply is a large player as well as Align Technologies. And what I showed you in the Largan versus Genius example actually works even in this. I don't have the comparative charts, but sometime I think towards 2013-14, Align Technologies actually came up with a lot of new innovations. And 2-3 years down the line, actually, they started to outperform Dentsply quite significantly. Though long term, I think Dentsply has got a much higher accumulated innovation. There was this brief spurt that Dentsply came up with, which Align Technologies came up with, and which allowed them to kind of, have a significant outperformance versus Dentsply. And I think that's the kind of story that you see in many of the other sectors which you analyze well. So I just, this is roughly, something that we kind of publish when we write reports. It's there in most of the reports that I've written about 6 reports, but this is something that kind of as a table which I provide. Now, one of the first thing that you see is, in these tables is something such as reconfirmation. We know some of the companies lead in these, particular sector or area, and that is the easy part, and they basically do show up. Partly because, they are leaders and the algorithm will capture them for sure. But I think what it allows you to do somewhat, just in terms of add value, is we may not know exactly how dominant they are, or, is there somebody else, or are we overestimating their dominance in a particular area? So that is one thing that this table will be able to tell you. The other thing which it kind of does is there are a lot of smaller companies and private companies which punch well above what you expect out of them, and this is able to capture that as well. And when that kind of happens, I think, and very often it might be in a niche area which they are basically doing very, very well. And you will see that these companies are classic cases for getting acquisition. In fact, this particular table, I ran the numbers for what it would have been like 3 years ago. That is the last 3 years of publications I just ignored, and looked at how the companies would have fared 3 years ago. And you'll see that 6 of the 20, which I've actually highlighted in bold, have been acquired. But if you really look one step lower, that is some of the smaller companies, you'll find that half of them have been acquired. So one of the benefits of this is you can actually kind of see, are there any potential acquisition targets, couple of years down the line. And as I said, this is a long-term one. So in the industry, they might be watching, but things will have to still kind of play out before somebody comes in and buys them. But you can actually, get a good sense of who might be good acquisition targets in this area. The other thing which I told you about the keywords that you can use. So what this algorithm allows you to do is allows you to narrow down your searches within a particular area. So to give you an example is, this can be done across sectors. So over here, peptides is a large area which we looked at. And then, if somebody just wants to look at the antibodies kind of behavior of peptides, they can go into another subgroup, a smaller group, and do an analysis of just that area and see who are the people leading. Or the next case is you can look as, who has actually come up with proper cures of it. So this is, you go and look at peptides which target tumors, and you'll get a different set of companies which come up with it. So depending on how deep you want to go, or how narrow you want to go, or how broad you want to go, the analysis can be done. And this is across. So another example would be if you're looking at alloys, you can look at the overall alloy space, or you can look at steel alloys, or you can look at alloys with rare earths elements in them. So it allows you to do multiple things, and either look at a broad area or look at a much smaller area. I'll just pass through this. So what some of the things which hopefully I get some kind of feedback where this could be more useful is, I think one of the things we thought we can do is currently what, the primary way in which I rank this is, what people who use the reports, who read these reports and who comment on these reports, who look at other patent filings and then kind of modify or improve on them. What they are saying is pretty much what is being captured just in terms of numbers. So if they kind of, cite it, we pull it down. So that is the way we are kind of looking at it. But there could be, it gets a little bit more kind of, standard analysis analyst report kind of, which is we get down into individual stock which ranks very high, and then kind of analyze the specific technology and look at what is the competitive advantage that particular company has with respect to this particular technology by actually us reading about what these journals say. So this is one of the things which I thought might be useful, whenever a report is published, rather than just providing a very high level, just numbers driven view. There are some limitations. The algorithms, looks only at English publications. So, there are a lot of research publications that are done in other languages. Even the patents, there are in other languages. So we are not able to capture those things in our, in our analysis. So we miss out on some of the, particularly some of the Chinese companies. I think I'd written recently a report on sanitary pads and diapers, and Hengan, misses out quite a bit on that. In fact, it doesn't come in the top few names at all. And part of the reason could be either they're not innovating enough. That is possibly one of the reasons. The other reason could be very well that, despite a very strong presence in China, they might be publishing most of whatever ideas that they're having or innovations they're coming up in Chinese, and not bothering to kind of do a translation of it. The last thing which, we do try to screen out the trolls, in the sense that there are people who just kind of publish for the sake of publishing. There are methods in which we kind of take that out, but they do come into the screen sometimes. And the flip side of it also happens. There are some companies which actually do a lot of innovation, but they just can't bother about, going to a conference or publishing papers, or even patenting whatever they've come up with. And so Tesla being, a classic example. But so those things might actually be things which don't rank very high. But by and large, I think those kind of things are the exception rather than the norm. So we are generally being able to capture and kind of do a reasonable ranking of how different companies stand within a broad sector or within a much narrower space. So that is pretty much what I wanted to talk about. And if there are any questions, really happy to do it.
Thank you very much for this, Pyari. As Pyari said, if there are any questions, please feel free to send them in now. And of course, if you have any feedback on anything that Pyari talked about here today, you can always email us at research@smartkarma.com, and we will make sure to pass it on. Pyari, since looking at patent filings is such a large part of your methodology, and we know that companies sometimes file several patents without necessarily acting on them, or as you said, some of them might not publish very much on their innovations. Is your criteria kind of the number of patents that a company files on something, or is it specific types of patents?
No, it is not. So I think the number of patents filed, you're correct. It can be can be very misleading, because we try to take out trolls in particular, but even companies do it. Partly, many of them are just defensive patents, so that they don't get. But the way we I think we give a lot of weightage to the kind of impact some of these patents can have. In some industries, you may not see too many very highly impactful patents, but in some areas you'll see very, very impactful patents. So to give you examples would be, if you get into materials area, there are very, very impactful patents that come in. But in some of the software areas, they're just not really impactful, but they do the filing and the numbers run up. So what we do is to do impact is, we have different ways in which we kind of look at it. But to give you one of the example is going to be who is citing the patent and who is commenting on these patents, right? So if it is a person who has got a large number of them citing, we give it a little bit higher weight, right? Versus somebody who has not done anything on it. So that is basically one of the ways in which we kind of look at how to rank these in terms of the impact. So, and of course, the number of times it is true, but we also look at who is doing it. So that is one of the ways, but there are other things as well, in the sense that, there's something called family patents. So if they're just doing it at multiple areas, they're filing the patents in slightly modified ways, they don't carry as much weight. So they, again, drop one level below.
I see. Thank you very much. That clears it up quite a bit. Have you established that innovation generally tends to be proportionate to outperformance? You cited the example of Largan and Genius, which was quite clear cut, but does it tend to, have you observed a trend in this regard?
Yeah, so I think yes. So in the sense that I've been running for some other companies. So to give you one of the examples, of course, Moderna got lucky with the mRNA vaccine coming up. But if you look, they actually were doing quite well with innovation before that came in. So they were there at the right time when the need came up. Another example would be, there are companies. I think there is a company called 10x Genomics, which is basically in the similar kind of area. They've done a lot of innovations, and they rank quite high in some of the impact levels of some of the patents. They've done quite well. And I gave you the example of Dentsply and Align Technologies. I mean, you can, I think Align comes in that name, though you cannot clearly see it because it is, there were 160 companies I didn't show. But if I were to kind of look at just that and have a look at the share price performance, yeah, they rank very, very high just in terms of the number of innovations that they've come up with, particularly in the recent times, and that is there in the share price, reflecting the share price. So one of the ways somebody can do is, if he has a particular stock in mind, can actually just go and then actually go physically Google up and search how many patents they have and count the number of patents. These are publicly available information. But The issue you will have is you just cannot do a proper comparison, right, as to how they stand within the sector. And that is pretty much what the value add in this really is. It kind of across the sector, it looks at any company which is kind of in that space, and relative positioning based on both the number of innovations, the type of innovations, when it was done, and the impact of the innovation. That is basically kind of consolidated.
I see. Thank you very much. You have talked about companies in the tech sector, companies in pharmaceuticals. Do these sectors, these industries tend to be better placed for your research to track, or can your research be applied to other industries as well?
Yeah, it's any industry. So, so if you're looking at even agriculture, right? I mean, you can have. So you might wonder what. Of course, you have Monsanto and the seeds and the tissue culture and all those as, those are like, high tech kind of stuff. So that is easy to know that there will be innovation and things happening. But even as things like simple things, how can you speed up spraying fertilizer, right? There are innovations in that area. And you find companies which make equipment that, speeds it up or gives a larger area or more equitably, some technology to more equitably spray it. Actually, they start to do better over time. And it can be done across all sectors. So that's not an issue. It really goes down to you defining what is the area you want to really look at, looking at what is, likely to be there with every company which is doing in this. So if it is going to be something as simple as a dentistry, you can, just bother about dentistry and kind of start to look. But if you look agriculture, it becomes very difficult because that is too broad. It can be, as I said, it can be seeds, it can be tissue culture, it can be equipments, it can be anything. So then you need to kind of narrow and do your search accordingly. So very specific definition of what you want to dig into. I think that is quite important. But it can be done across all sectors, semiconductors, and even cryptography. Maybe not crypto as in cryptocurrencies, but there is cryptography before currencies came in, which is the financial industry using. So you can have a look and see who are the banks who are best in this, right? So, and who have come up with, these kind of innovation, whether it's PayPal or whether it is Square or whether it is Bank of America or MasterCard, you'll be able to get an idea as to, who has been the most innovative in these areas. So it's across different sectors. Yeah.
Got it. Thank you very much. If you had to pick one or two most exciting opportunities for investors, where would you point them to?
So look, I think this is, firstly, as I've got this philosophy of don't take candy from strangers, which is, I'm a stranger, you're right. There is nobody who is kind of directly linked to me to take the thing. But I think longer term, if I were to look at the overall space, life sciences will see what happened in technology, in the sense that, if you go back about 20, 25 years ago, technology would have been about, 5% of GDP or 6% of GDP or whatever, but that has come up to around 15, 20%. And partly because there have been certain breakthroughs which we just didn't expect. And what we often, this thing is the knock-on impacts. To give you an example is, we talked about Largan and Genius, the camera modules on the phones. How that has impacted Google and YouTube, right, is huge, right? In fact, YouTube would have made more money from the evolution of high quality camera modules than Largan made, right? And that kind of innovation, I think there is a good possibility of happening in the life sciences space. And then I think it's very difficult to figure out what the knock-on and the benefits are going to be, but that could very well be something that, longer term will become a much more important part, and you'll start to see companies with, significantly large market caps, with double, triple, quadrupling kind of market values.
Right. Digital health is a big conversation topic these days. And I think it's interesting that you mentioned YouTube, because it seems like those exact big tech companies, big consumer tech facing companies, are also set to play a very large role in getting this digital health technology to consumers. So in this sense, it might be worth to continue looking in that direction. Well, thank you very much, Pyari. If there are no other questions, we can wrap our session up. I would like to thank you, all of you, for attending today. I would encourage everyone to follow Pyari's work on Smartkarma, as he will certainly share more interesting insights down the line. And if you wish to engage Pyari directly, please reach out to your Smartkarma account manager and they will help connect you. Pyari, thank you very much once again.
Thank you very much for hosting this. Thank you.
Thank you, everyone, and goodbye.